How you guys been? Hope your weekend has been good. This will probably be up by the end of today or first thing London Open tomorrow morning. Not necessarily London Open, but during the London session tomorrow morning, this will be up. Now, last week I gave a recap of Monday and Tuesday and the previous week, and this week is actually a good week. Though some people found it difficult, but it was actually a good week on my part. And yeah, there are times where I find it difficult when other people are having good weeks. But yeah, this week you did 188 pip move, which was I wouldn't say fully expected, but this liquidity was bound to get taken eventually. This tops here, but this were the two main ones I was looking out for. And what I'm expecting this week is if we don't break back into this range, basically if we don't go back below 1.13240, it would head for this highs here and eventually going for March high, the highs of March, which is the highs of March. That's what I'm expecting. Now let's just go to the first thing on the plate, which I want to get away with, and is a US JPY. Now, here's the JPY was pretty straightforward, and it's one of my favorite setups. And I think I was talking about this with Peter and on Twitter. And the setup is basically price running into an odd block, and then the next day price coming out and taking out the previous day's high or the previous day's low, deeply into that odd block, and then I'll just look for the other side of the range. The same thing played out again on Friday, but I didn't see this beforehand because it was NFP day. I didn't want to get bothered with it. Now, we had this as Monday and this is Tuesday. And mind you, no big move, like no crazy move happened between Monday and Tuesday, just basic price action. And what I had noticed was we ran into this order block on Tuesday. So price ran into this hourly order block on Tuesday. But if you notice, we set sort of like a double bottom with this candle and this other candle. So for me, this was the range low. So what I usually look out for is I'll look for price to take out the previous daily high deeply into this order block, and I'll refine this order block to a 15-minute order block, and I'll look for that level. So now if we are to extend this up until this point, if we are to extend this and go to the 15 minutes, if we are to extend this and go to the 15 minutes, this is what I was looking out for. Price to take out this high. So this would act as the range high here. And for me, this was the range where you can see this is almost a double bottom. So refining it to this level, this is what I was just going for. And as soon as price took out this high with this candle and started rejecting back into this range, that's when I took my shorts and I had my stops above this. So it was somewhat of like a 5 hour, I think, or something like that. So it was like a 6 hour. I collapsed my trade around this point, just right before, after we took out some price pulled back into this, I collapsed the trade, and I'll provide screenshots of this. And if you notice, the same setup happened again on Friday. Now, if you look at this, Thursday we run into this hourly OB. So same thing, Thursday we run into this hourly OB, but on Friday, right before NFP, price takes out the previous daily high. So prices had the previous daily high. Now, if I'm to refine this to the 15 minutes, what you will notice is this level here. So what you notice is this 15-minute order block, and if you were to scan all the way down there, you can see that price takes out this high, drives it into that level. As soon as it close, start pulling back within this. You would have easily taken the trade, having your stop loss here. You would have had a descent 5 to 6 to 7, depending on where you wanted to close. And same thing if you were using range play of the previous daily high and price taking the previous daily low, that would have been a 7 to 8 to 9, depending on if you would have held it that far. But this would have been the descent trade regardless. So, but I didn't trade NFP day. Now let's go back to Euro USD. I've been updating this chart as time goes on. And this was my confirmation. This was, as I said in the previous YouTube videos, this was my big confirmation here. As soon as it broke structure and returned back to this 4-hour OB, and the wick broke out of this breaker, dipped back into the break, and we just started pushing high. When we got back above the EQ, I think it was the last video that I put out, which again, I apologize for that video because the audio was bad, which was the last video I put out. And I said that price was most likely going to find support somewhere around here and push higher. But if we don't, we would dip back down, take out this low, dip into the EQ of the range, and dip into a contraction level. And if I go to the hourly, you would see the contraction level, which This was my premise of the trade on Thursday, but I'll fully go over this, and then price pushed high, and I'll explain what happened on Friday. But let's take it bit by bit, and let's start with Wednesday. So yeah, that's trade history for Wednesday. Where's it? Do I have to open a new chart? Let me just open a new chart for Wednesday. All right, cool. So now this is Wednesday. So what I was simply looking for on Wednesday was for EU to use the block from the Asian session. So looking at the 15 minutes, as you guys know, the 15 minutes is my favorite time frame. Now looking at the 15 minutes, we had contracted a bit at this point. And then price broke higher, and then obviously broke structure highs. Now this was the order block I was looking at, because as soon as it was London open, this was the level we're finding support, taking out this lows into that level of support. But now I was a bit, I don't know if I should say iffy about this longs. The reason why I was is because of this. This triple bottom here. I knew that price was eventually going to come for this level. Reason why is because this was a triple bottom, flat market, and again, it was a round number level. So let's just call this 1.1250. I knew that price was heading for 1.1250 eventually that day, but I knew that eventually price would have to run up before bringing price back down. So my plan was to get in here and then make price, follow price running higher, and my TP level was 1.1288. 1.12888. Yeah. So what I was just looking for was exactly 30 pips from this high, and if I am to do this, you would know why I chose that level. So you can see that's exactly 30 pips. So I got my first entry here, and then I decided to compound a bit on the 5 minutes. So when price hit this level and started pushing higher, if I zoom in, you notice that this was a stop run here. I had a stop run here, so I got another entry when price broke above this breaker. I had my stop loss below the order block here. So basically entry here, stop loss here, and when we broke above this other breaker again, I had my entry here, I had my stop loss below this order block, and then price ran higher for 1.1288. As soon as he hit that to the T, it started breaking back down and then found some bearish structures coming back down. And I wasn't interested trading all of this or this or this. I got my 30 pips and I just wanted to be out of the market. And again, with this move up, that's when I took here's the JPY and I had this short. So it was a very good day for me. I was satisfied. I just wanted to get done and get out. Now, what you notice is that when we dropped down lower, right, price literally came. I'm to apply this and take this off. Okay. So this 100% level you're seeing here is the high of the range. So price literally came to the EQ of the range after taking out the triple bottom, right? And basically consolidated, and then started asking if we wanted to move higher. I really did this marker, which I'm going to insert the screenshot here. So I did this marker, and I knew that price was going to come back down. Well, let me not say I knew that. I was expecting price to come back down to the contraction level. Now, and if you look at all this, this is the only place where we have a cluster of price. This is a contraction. This is an area of concentration. Price is going to dip into that to pick up orders and then push higher. So this is the level I had marked out. And if you look at the range of this day, this was slightly around the EQ. You can see this. So this is the low of Monday. This is the low of Monday. This is the high of Monday. This is the EQ of Monday. So price was dipping into the EQ of Monday's range. You just need to understand what range to use. And if you notice the last two videos, I've just been talking about ranges. So price was dipping into the EQ of Monday's range, which is an area of cluster, area of concentration, area of contraction, area of ranging, whatever name you want to give to it. So now, this is one thing I was describing to one of my mentees, and I told him sometimes you take a loss and it's just something that was inevitable, like it was out of your hands. And sometimes you take a loss not because it was inevitable, but because you didn't stick to your trade plan. So after marking this, and after saying I was expecting price to come into this level, I decided to take my trade. I think it must have been from this order block. And then I got spiked out because I had my stop loss somewhere around here. I got spiked out. And it's just something silly of me. But yeah, this day, I took a loss on this day trying to take the longs. If I had stuck to the original plan, which was to go in, hit from this level, if this would have been probably a 12, 15 pip stop loss, but regardless, going for the previous daily high, it would have gotten a 7 hour. Now, after we had hit that level, I noticed a lot on the timeline, Twitter, Instagram, people kept on saying that now Euro is ready to go down with total sweep this high, NFP is going to take price much lower, which to me didn't make any sense. Now, first of all, most people that are trading this always forget that there's always a bigger time frame. Now, if I'm to take away all these objects, object list. So if I'm to take away all these object lists and go to the daily time frame, the first thing you notice is the body of this. So out this is Monday, Tuesday, Wednesday is the only day we have this, and as soon as we close above the body of this candle on Thursday, if you are to mark out the body of this candle, this is what you'll notice. Now, on the side that the body of this candle is here, if we look at the SMT divergence now, if you don't know what SMT divergence is, you can go look for it. You can go look for it, but those that do understand, just watch here. So on Thursday, after all of this has happened, so this is a bigger picture of price playing above the range, dipping back into the contraction, which is the EQ of the bigger range, and then we're preparing to move higher. At this point, people thought that the exhaustion had happened and Euro was meant to tank lower with NFP. But then look at this, right? We take out the previous daily high on Euro. So basically, Thursday takes out Wednesday's high and we'll make it high. But then if you go to look at the Dixie, we refuse to make a lower low. So the Dixie doesn't make a lower low, but then Euro makes a high. This is a break and a cracking correlation. At this point, you're meant to know that the market is meant to do something else instead of what the whole retail world and everyone else is thinking. Now, what simply happens on these days is that as soon as we break and we'll confirm the end of day close above this high, we dip into the EQ of the premium range. Not only do we dip into the EQ of the premium range, we dip into the body of Wednesday's candle. Now, if we were to look at the body of Wednesday's candle now, we scroll down to the 15 minutes, this is what it's going to look like. So this is the body of Wednesday's candle. It's acting as a support level, support, breakthrough, support. And again on Wednesday, it comes and it keys off of that. Now it's keying off of this support level. If you didn't have the confidence to go in from this point and have probably stop loss below this level, which would have probably been like a 10, if I'm not wrong, 10 to 5 pip stop loss. So this would have been like a 7.5. So let's say you made that a 10 pip stop loss. If you weren't confident enough to do that, what you should have simply just done is, okay, price has come and keyed off of that level and then it's pushing higher. Simply just gone with the breaker. So now we have a breaker here that sends price down to this level that you're expecting, keys off of that perfectly. Here's a stop rate. So here's a stop rate in price. The bodies of the candles are respecting this level. They do not want to go lower, and then price is pushing back above. Now the break and close above this, which is this candle, here would have been your entry. And how I like to treat it is have my entry at the high of the breaker. That's even using a breaker. I have my stop loss below the closest order block, which is here. So here's your entry. Here's a stop loss. Now you have done that, you would have probably had about, let's see, probably had about 6 pip stop loss. Now, if you're having a 6 pip stop loss, I remember what the first order of what the target was all week, which was the high of April's range, and that level was 1.1324. 1.1324. Yeah, 1.1324. This was the high of April. So this was the high of April. This was the level we're going for. Having this trade like this, 6 pips, going for this, that would have been an 8R. Now, I don't advise anyone to trade NFP. I just couldn't be bothered. I had the first 3 days good, took a loss on Thursday, and just decided, you know what? There's a chance I could do this, but let me not risk it. I just decided to stay out. So having known this would have been a 9R trade for you. And as you can see, knowing, as I said, something I said in the last video, I said in the last 2 videos, I said when you know you've picked your levels out properly, when price breaks above, When you get that retest, it's going to respect it, and that's what we're getting here. Now, that's just a quick recap. When price is opening on Sunday, I do not want to see a 4-hour close below this level. If we get a 4-hour close and a daily close below this level, we might come back to fill this void from Friday, because this is a very thin, inefficient move. NFP created a very thin, inefficient move. So if I get a 4-hour close below this, I might be looking to take shorts to close this inefficient move from Friday. But if price decides to respect this, level, I'll be looking to fully fill out this void, take out the stops at 1.1390. So take out the stops at 1.1390, and then eventually head for the highs of March, which would be at 1.14. Let's just call it 1.145 or 48. 48. Yeah. So these are the next two levels I'll be looking out for above price. But if you close back into this, I'll be looking for the void fill of this. But so far, price has created very constructive support levels here, here. The EQ, the body of this candle. The only thing that we have below market that I could see price coming back down towards is Friday's void. If not for this, I would be aiming for highs, which is this level and this level. So that's just a quick recap, guys. I know the audio is going to be better this time, and yeah, again, I appreciate the likes, the comments, the love from Twitter and Instagram. I hope you guys had a beautiful weekend. Yeah, I'll catch up with you guys during the week on Instagram stories and on Instagram. All right, bye bye.